Hello, and welcome to Premium Bytes, where we shine a light on the unsung world of insurance technology leaders. I am Sudhar Krishnamachary, one of your co-hosts, and with Samir Ahmed, our other co-host, we're here to have meaningful conversations about the evolving technology landscape inside the insurance industry. Let's acknowledge it. Being an insurance firm CIO or Chief Information Officer is one of the toughest leadership roles in today's world. You've got a risk-averse mindset baked into the very fabric of the industry, a legacy estate that must complement the modern tech, and a talent crisis from both the retiring side and next-gen recruiting side. And then you got the slower pace of innovation. We see it because we're right there in the trenches with you as consultants day in and day out. Our mission is to deep dive, have conversations that carry substance, offer practical insights, and help you validate and navigate the relevant challenges of being an effective CIO in the insurance sector. So thank you for joining us on this adventure. Let's jump right into our next conversation. Hey, Samir.
Hey, Sudhar. How are you doing?
I'm doing well. Thanks. Welcome back to the episode number 10.
Yeah, that's right. Hard to believe, but we're in double digits now.
That is true. We are in double digits. I'm really excited. Appreciate all the collaboration that we've had so far, and appreciate all the support that our audience are giving us.
Absolutely. None of this is without our listeners, the tech leaders for whom we want to have some empathy and shine a light on their tough work and jobs. Last episode was interesting, right? We kind of started this 2 or 3 part journey on cybersecurity, cyber insurance. So last time we talked about, as an insurer, they have their own cyber risk, and what can a tech leader do about it? We touched on various aspects of that. And we had identified, right, that there's this other side of it, that as an insurer that offers commercial insurance, if they want to offer a cyber liability product, what are the considerations and concerns of the tech leader for that firm? So today, let's dive into it, shall we?
Absolutely. So one of the things I remember, I think we kind of somewhat touched on this last episode, was that we were focused a lot on the technical aspect of building those capabilities. And now that we're focusing on this, the first big, elephant in the room that we have to acknowledge is, unlike all other insurance products, perhaps cyber insurance products is perhaps a lot more technically sophisticated, and that requires a nuanced set of capabilities, and that it's something that not every insurer can aspire to, because they need to have advanced set of capabilities from a very nuanced set of cyber incident management, cyber technology management, risk management, and so it's a conglomeration of all of those capabilities. So I feel like it's a commercial insurance, but it's also very nuanced. So is it appropriate for everyone?
Yeah, it's an interesting angle to talk through. I feel like actually that is in fact a very it creates a unique situation for tech leaders, right? That because of the sort of tech heavy nature of this, and we can talk through a little bit why we say this, right? It's self-evident for people that are doing this. Maybe for others, we need to unpack it a little bit further. But the tech leaders have a unique opportunity where they are going to be the ones to lead the cyber liability product development and the underwriting practices and the risk management, loss prevention services that are offered, and then the claims investigation, right? Because all of this is building on their core expertise as tech leaders, and particularly the security team within the tech org.
Short of just the actuarial modeling and some of the nuances around it, I think they can pretty much cover the base across all the other 3 bases in the field, right?
That's right. And look, if I'm a tech leader at a growth-oriented carrier, right? I have aspirations, and CIOs become COOs these days, right? So maybe there's a path here.
So do you think if a carrier like I'm going to take Hartford, if the carrier like a Hartford has a mature set of cyber resiliency practices and capabilities and talent base, um, uh, uh, is your hypothesis that hey they might be better suited for creating good cyber insurance products and be able to service those products in the marketplace.
Yeah, I think of it from two perspectives. Right, the first one is that if I'm contemplating, uh, you know, launching a cyber liability product, um, it would behoove me to look at my own, cyber
Posture
posture,
and
right?
right.
Yeah. We talked last time, right? How you go about doing an assessment and figuring out how you fare and how to shore up your resiliency and all of that. So if I feel good about, hey, I've done a good job of managing my own risk, then maybe I am onto something that I can offer to others, right? And
Right.
I can manage others' risk as well. But if I feel like, sure, I'm managing my own risk, but I have to rely on lots of partners to fill in the gaps that internally I'm not able to cover, then I will take a second, third look at that before I say, yeah, I can do this for others as well. So absolutely, I think it's an element that I should feel good about how I manage my own risk.
Correct. I think I'm somewhat in my mind thinking that when the next big incident happens within a cyber carrier's IT estate, the proof will be in the pudding around that, right?
Yeah, I mean, which I think you're touching on. Maybe that I said there were two aspects the way I think about it, right? So the second aspect is that look, when you have a skill and you offer a service, right? You don't always treat yourself with the highest level of service, right? You sometimes will provide the bare minimum that's appropriate for your size of business. Kind of like, the cobbler's kid with no shoes, right? You're still a cobbler, you're good at what you do,
Correct.
but maybe you don't give importance to your own situation. So there is that side of it as well, right? That you may have the capability, but is your own house in order? Maybe not. So
And to your point, I think if that is the case, I think we are already beginning to see this. All of the major commercial players are already kind of playing in the space, and the more they are larger, they already have a degree of cyber resiliency built. So there it becomes a I guess a one feeding off of each other, right? It becomes natural for them to. They're already kind of like working on their shoes, so it becomes easy for them to become a cobbler in this space.
yeah, I think those dynamics are there. There's also, look, it's a profitable line right now. Yeah, I was recently reviewing some metrics, right? 20% margins on this line. So of course it's attractive. It's a growing space as well. There was a
until
slight
the
drop
until
in
the big
premiums in
until the big event hits them,
2023.
right?
Sorry.
Until the big event hits them, right? So I think it's like keep it going at 20%.
Yeah, I mean, we kind of ended our last episode with a teaser right around. It was timely because when we recorded it, we had just the Berkshire Hathaway annual meeting had occurred,
That's right.
and there's a clip from there, right, that we mentioned where Ajit Jain, head of their insurance business, commented on how. Uh, distributors, right, are going after this in a big way because the opportunity's there, it's selling, it's profitable. But he was cautioning, right, that they are trying to pump the brakes a little bit on this, maybe not a little bit, maybe more than a little, because they're worried about uh, the lack of full understanding of the exposure of a single incident. That a single incident, is it a single incident, or is it a catastrophic incident that has ripple effect? And he uses the example of, right, a cloud provider as a cyber incident. So I think that is there, right? So sure, it seems profitable right now, and to your point, until that one incident occurs that has a ripple effect, and I mean it can wipe out the largest of the large carriers if it happens in that way.
But in contrast to what we discussed last time, we talked about a lot of capabilities to build just to build your own resiliency as an insurance company and a company with a lot of data and network of players playing in that space. But if you were to provide that service to other businesses, especially larger businesses with a lot of data and third-party risks, it's just a completely different set of cutting edge capabilities that you have to master and be on top of. So I wonder, again, neither of us are experts, so I'm not trying to share something that I already know. I'm almost curious what you have found out based on your research. Is how is there an ecosystem of cyber security partners that the cyber insurance company leans in on to design a product, to assess the risk, price it, even to do an audit after the incident occurs and manage the claim, etc.?
Yeah, I mean, look, I'm reminded of sort of the playbook is not new here, right? Uh, new risks emerge, and companies figure out how to create an insurance product around it because the market is demanding it. And it starts out with, right, there's a specialty product, there's a specialty distributor for it, maybe an MGA with a focus on that risk emerges, maybe a few of them emerge over time. And if it is in fact something that becomes a little bit more mainstream, right, slowly the capabilities move from the MGA back into the carrier. It's no longer the carrier just providing capacity and paying for claims. So that playbook is there, right? And I think, yes, there are firms that have strong cybersecurity sort of capabilities. They can do assessments very well. They can provide continual assessment services. They can provide risk reduction services. They can provide investigative services. So a carrier need not do all of this themselves to start out. There is that playbook of partnering with somebody else that
So what you're
encapsulates all
saying is
this.
it's no different than insuring an asset like a business or a property. The insurer doesn't necessarily personally have their own people assessing the properties. Third parties do it, and so in many ways, I think structurally this product is not that much different from another set of commercial or personal property insurance.
Yeah, and I want to be clear about that point, right? That I'm just talking about the playbook and the structure and the levers you pull. Fundamentally, the product is different, the risk profile is different. So I'm not by any means saying it's the same as something else. But yeah, that
So
playbook and the structure and how you approach it, I think that is fairly similar here.
see, from what I used to keep a tab on this company called Corvus Insurance only because a friend of mine moved from a traditional carrier space to run Corvus, but I've learned from observing them a little bit that majority of them are like somewhat. It feels to me, I'm not an expert, but at least targeting a specific set of either sub regions or business segments or some sort of a refined risk profile within their cyber risk portfolio, right? It's not like they're saying that they'll write everything. So perhaps there is a degree of criteria that is emerging, especially if you're just starting in the space, to be a little bit more targeted in the kinds of cyber risks that you underwrite, and then slowly expand from that.
Yeah, I mean that resonates with me, right? So I mean, just to make it concrete, right? You've got your one-stop shop carriers, right? If you have a business, doesn't matter what sector you're in, you can get insurance from it from these large carriers. But at the same time, right, you've got commercial insurers that focus on one niche, right? Maybe they're focusing on commercial property for multifamily dwellings, right? Apartment complexes, hotels, motels, and that's it, right? If you're a restaurant, no, don't come to me because I don't specialize in that. I'm just specializing in this. So same way, right? When you have cyber liability, I think there is an opportunity to triage the market and say I don't have to start with providing cyber liability to a SaaS, software as a service company, because they're probably at the far end of
The
their
risk, right?
surface
Yeah,
area of risk. But maybe I can start with the cyber liability needs of a barbershop, right?
right. Oh,
They
it's a
need
great
it, right?
right.
Because they have
Well,
POS and they have maybe some web assets and there's some e-commerce to their barbershop. But it's a contained profile of risk, right? So
so at that point, it
absolutely, I think
becomes
that
a
opportunity is there. And again, right, that's back to kind of the playbook, right? You've got uh, commercial business classification and tap into class codes. So these class codes I cover, these ones I don't cover. Go
correct.
somewhere else for them.
I'm thinking then it becomes in your case of a barbershop as much as it's very simple, but it's a valid example that it probably falls more closer to the spectrum where it just sits right next to the general insurance or the business owner policy that they may have, which may exclude anything related to a cyber incident. But they're also, at the end of the day, this cyber incident for a barbershop is for the most part covering, loss of revenue and perhaps some loss of, information assets and some things of that, and some data and things of that nature, but still very close to a BOP policy coverage and exposure.
Yeah, that's right. I mean, typically your general liability will have an exclusion for cyber liability, and so you need a add-on for that. Um, and yeah, this is just adjacent to that. I think that's a fair way to look at it.
Correct. On the other hand, like, do you think by focusing on, for example, if I forget if Corvus were to do this, they will be like, oh, we can only insure software as a service companies. Then they become very narrow and say, well, if you're a software as a service, then you're running on the cloud, and if you're running on the cloud, you ought to be running on AWS, and so you're already checking the box from a whatever, right? SOC compliance or whatnot. So there's perhaps a higher degree of assurity that those kinds of risks are at least managed through a much more sophisticated infrastructure, versus a barbershop may or may not really do anything that is right.
I mean, look, there's no free lunch, as they say, right? So specializing, yes, it provides you this unique sort of opportunity to become an expert in a certain particular segment, but it also brings with it concentration of risk, right? So if your exposure is SaaS companies running in AWS, guess what happens when there's a cyber issue at AWS? It ripples through your full book of business, right? Because you're so highly concentrated.
I think that's kind of what Ajit was talking about in the last video that we were referring to, isn't it?
That's right. He didn't get very specific, right? He talked about incident with a cloud provider, right? But yeah, I think that is it. And last time we referred to the incident with Move It, right? So just to kind of connect some dots here, uh, Move It had a issue with a data breach, right? Uh, so there's cyber liability of Move It for its own purposes, right? That's one part. If you're the writer for cyber, right? Sorry, the cyber writer for Move It,
Move
you
it.
have
Yeah.
one level of exposure. But now, what actually happened is, right? Move It was used by many companies, and every company that was a user of Move It had to go through, data breach disclosures and the likes. So now,
Sure.
for those companies, right, this became a third-party cyber incident.
Sure.
Now, if you're the cyber writer and you happen to be covering Move It's customers as well, now that one incident mushroomed from just one claim to potentially tens or hundreds of claims.
Correct.
But then, furthermore, right, if you look into the Move It sort of situation, there was a company like Pension Benefit something. I can't remember the
PBI, I
exact
think
name.
it was.
Yeah,
Yeah.
PBI, PBR, something like
Right.
that.
Right.
They were a user to Move It, but more than that, right? They were providing services to companies like
Practically every
Northwestern
insurance
Mutual and
company.
Prudential, and I mean, pretty much, yeah. You pick a retirement company, and they're a customer of PBR. So now you're like not just third party, but fourth party, and sort of in the industry, people talk about nth party risk. And Prudential has a class action lawsuit. At least I don't know what how far it's progressed, but in state of New Jersey, right? I think it was working through the court systems.
Yeah.
So when you're the writer for cyber for Move It, and if you have not structured your coverages with limits on, this is just for first party liability. Maybe it covers third party. Maybe it covers nth party, right? Your exposure is vastly different.
Correct. Do you think they can still do and we could debate this a little bit and say, is this an in-house capability or an outsourced capability, right? Typical commercial insurance or even life insurance is like you ask a applicant to provide a set of information, gather what you call as a questionnaire-based response, and then you match that against your model, and then you somewhat assess the risk based on the information provided and price that risk. And then you do some level of due diligence, but that initial due diligence is still just validating the information that they have provided to a degree, right? In the cyberspace, one could argue that a small business can go through a checklist of information and then they get a whatever, right? For my size of revenue scale of operations and number of people working, I get a $10,000 coverage for $1 million liability, cyber liability. On the other hand, the cyber insurer could say, hey, no, I have to do a scan. I have to run a full cyber scan on your network. I have to do resiliency testing. I have to do A, B, and C and go through a much more sophisticated set of capabilities in order to more accurately assess the risk. And all I'm saying is that I think there's room for an innovative insurance carrier to kind of move across this and become a lot more sophisticated, because in one way or the other, they have to do it for themselves, and or these capabilities are available anyway.
Yeah, I think what you're saying resonates with me. That we do it in other lines, so why not do it in cyber as well? And I think small companies, right, that are sort of tech forward have the advantage here because they can focus on sort of building this kind of capability and providing that continuous assessment, you know, uh,
Small.
approach
When you
to
say small, Samir, I'm guessing you're small, mid to small sized commercial insurers.
or even right just specialized in MGA that's offering cyber, right, or a carrier like Cowbell, right, that's what they're doing, Cowbell Cyber, right. So I think they have this sort of opportunity. And by the way, right, there's even some parametric cyber that's in the market, which is very much along those lines, that you do constant assessment, and the moment there's some threshold of issue that's reached, you don't even file a claim, right? You just get the claim payment.
Yeah.
So
Is
this is not mainstream, right? But I think this is where the innovation opportunity is.
I think
And
so too. And I think the market may be somewhat mature that almost all the big players, at least 7 out of the 10 big players, are already playing in the space. But I also don't think that every business of any size is necessarily opting in to get cyber insurance coverage. So I think it's largely a market that just sooner or later they would have to buy. Uh, unless there's some other ways that the BOP itself starts covering, which I doubt they would, because that's just revenue a loss for them to add within the same BOP the cyber types incidents.
yeah, I mean, look, I don't know these with that much specificity, so I don't want to speak out of turn on it. But from just a common sense standpoint, right, what I think ought to be the case here, right, that uh, there's exclusions for a reason, right, and let those be exclusions, right. But the moment you bring them into the product, right, you got to go back to the drawing board a little
Exactly.
bit on your pricing and
Yeah.
your book of business
You're
and
obviously
all of
expanding
that.
the risk profile of the product
That's
significantly,
right.
right?
So I think it's probably a better play to structure it as a standalone product rather than an add-on.
Right. Right. A last point, I just wanted a curiosity question again is this whole idea of advisory services that I saw on Chubb's website that uh, they're like, oh, click here to take advantage of our cyber advisory services, and then I'm truly wondering, like, is Chubb capable of providing cyber advisory services to mid and large enterprises,
Yeah.
or not?
Well, I think again, right, kind of this two-parter to it, right? It's the same playbook, right? That they provide loss prevention, services. So why not provide
Why not?
cyber loss
Right?
prevention service as well? And fulfillment of that service, is it Chubb people or did Chubb partner with somebody, right? I don't know, but either way,
Yeah.
right? It makes sense that
Well,
they're
the same
offering
thing,
it.
right? Loss prevention also, there's a lot of TPAs and intermediaries playing in that space. So
That's
clearly,
right.
the structure will also lend itself in the same model, right?
That's right. That's right.
Right. Awesome. No, I think this is the great discussion as we always look at this one. This is something that we can always have a lot of different things, but neither of us are experts. So hopefully we have kindled the curiosity feathers of our audience with the 4 or 5 things we touched on. But I also want to acknowledge that I think at the end of the day, I think that we started off with that Berkshire Hathaway uh, investor presentation point that both Ajit and I think Warren made. And what was somewhat enlightening for me is when I first saw that, I assumed that they just don't want to play in the cyberspace. But as you had pointed out, that they are what, a number 7 in the marketplace in terms of the
Yeah,
direct
in
written premium on cyber.
2023, based on 2023 premiums, they're number 6. At least this is on the Fitch ratings list, right? I don't know. There may be
Yeah,
some differences in how they're counting, but they're a large writer of cyber, right? Number 6 in the US.
Correct. And so I think the upside is huge for almost everyone, right? I think words provided by Ajit and Warren were still valid, that you got to be cautiously optimistic when treading this space. But another data point that pops in my head is someone like Liberty Mutual with what $20 billion of commercial written premium versus in that same statistic we saw that they were writing about 100 million worth of cyber. And in my mind, I think every dollar on that commercial insurance somewhat can pay at least another 20 cents of cyber liability when you add another piece of that to that portfolio. So there's enormous potential for someone like Liberty to grow, but maybe there's a lot of new capabilities that they need to build, and they're slowly kind of testing the waters, and the market is also adopting. So I'm thinking like more the Corvus approach, where a startup like a Corvus will build all the capabilities, and then a player like a Travelers acquires, or maybe Liberty is organically building all of this for a very long-term play on this to become another 5, 10, $20 billion cyber business on top of their commercial.
Yeah, I mean, look, the numbers are there, right? Cyber was like $5 billion space in total in the US last year. So lots of room to grow, right? If you compare the amounts that people are paying for single incidents, right, with ransomware and so forth, they're on the rise, and not only on the rise, right? These actors are now going after the small, mid-sized businesses, because why would they spend their time on them, right? The large companies have put in practices to prevent. Well, let's go after the softest targets, right? And they're still money makers for these criminals. So yeah, I think the space is going to continue growing.
Yeah.
Look, maybe just to kind of bring this back to, so we're talking unusually, right? We don't really talk about the business of insurance too much here. We're really more focused on
Technology.
concerns of a tech leader. So bring it back to maybe here, right? So if I'm a tech leader at an insurance company, what do I do with all this information that we're just going through here?
The way I believe this is going to transpire is that I think the CIOs and the tech leaders of these commercial insurance companies will have a much more direct role to play in kind of helping these insurers build the cyber insurance portfolio. 5 years from now, maybe 10, but sooner or later, almost all the commercial insurance players will have their own cyber coverages. And we believe that tech leaders are uniquely positioned to kind of champion this. Of all the products in the portfolio, this is a product that is close to their heart because they understand it inside as well as outside. So in many ways, I'm hoping that our audience will be, if they are not already part of these discussions, will voluntarily be part of these discussions to define the product and the growth strategy for these.
Yeah, absolutely. And I think it cuts across, right? This is likely to be a digital product, right? So
It's a
chief
digital
digital
product.
officer, for example, has a big role to play. It's likely to be data and analytics intensive, right? That aspect of your tech org, right, is likely to be engaged. It is naturally right about security practices. So your security team that typically is maybe on the sidelines here will be front and center in a big way. Uh, and then, of course, right, your app dev and API and integration kind of concerns will be there as they are anyways. So yeah, I think it's probably a big opportunity for tech leaders across the spectrum, no matter where they're playing here.
Yeah, technology is the business strategy, and this is one of those things where it perfectly fits that bill, right?
That's right. That's right.
Yeah. So with that, maybe we can wrap. Samir, thank you as always, folks, for joining us and listening in. And please like, comment, and subscribe, and of course share, and more importantly, engage with us on LinkedIn or in other forums where you listen and engage with us. And we look forward to the next episode.
Yeah, and we're 10 episodes in. I'd love to hear some feedback on what are topics you'd like to have us cover more. What topics have we not covered yet? So appreciate.
Yeah, important to toast for that 10, Samir, on a Friday afternoon.
Yeah. Cheers. Here's to the next 10.
Yes, likewise. And that's a wrap for today's conversation on PremiumBytes, where we shine a light on the unsung world of insurance technology leaders. Thank you for joining us on this adventure and being part of our community. Don't forget to like, comment, subscribe, share, and follow us. Until next time, take care.